Go. You're on.
Okay, so this presentation is about federal and state, and I'll kind of weave in between the two. If you have questions, you may want to just, go ahead and blurt out your question instead of me getting to some sort of stopping point. It's kind of a lengthy PowerPoint, and I'm trying to get it done in a finite amount of time. We will get to some fun pictures that are interspersed throughout it, hopefully. But there's just a lot of information about it, and I've tried to deliver it in a concise manner. So, as I already mentioned, the federal historic tax credit is 20% of your eligible rehab cost, and the state is 25%. So, you can actually twin an application on one property. The state allows us to fill out just the federal paperwork and give them a copy. So you can actually get 45% back on income producing projects. So if you have a commercial building or you have a house that you want to rent out, you qualify for federal if it's income producing. On the state level, you can just do a state one if it's your private residence. If you happen to live in a historic house, it's in a historic district, or it's listed individually to the National Register, you could just do a state tax credit. That one does cap out at $100,000 if it's your private residence. So like I own a rent house next door to my house, and we did the federal and state tax credits on it. And I don't know, some people feel like it's kind of like getting free money at the end of your project. It's not free, but it kind of feels that way. So a tax credit is the authorized amount that may be applied against Arkansas corporate income tax or premium tax. And it can be earned by an individual, a partnership, an LLC, S corporation, or corporation. So I have people that they are partners in a property, and so they typically have formed an LLC so that they can be jointly claim the tax credits. Oops. And the structures that are eligible are either listed on the National Register of Historic Places individually, or it may be a structure that's in a group, like in a historic district, and it's classified as contributing. So that's the main criteria if you want to apply for a tax credit. I get several people a year that they have a building that's possibly eligible, but it's not been listed to the National Register. So sometimes we're doing some preliminary work to see if we can get a property listed to the National Register so that it is eligible for the tax credit program. And sometimes that works, and sometimes that doesn't. So if you pay personal or corporate income tax in Arkansas, you would be eligible for the Arkansas credit. So that's one of the things too. It goes as direct offset of Arkansas income tax. So if you are paying Arkansas income taxes, this is a great benefit because you will have a little pot of money when it comes tax time to pay your Arkansas income taxes. If you're a nonprofit, oh yes ma'am.
If you have property that's ran down and it can be reestablished, and you want to tear it down to do a playground, can you do this application?
No.
You can't?
To do the tax credits on something like that? No, it's only for buildings. Yeah. So if you don't have tax liability that you would be able to use the tax credits for, or you do not want to use it against your tax liability, the tax credit is actually what is called transferable, meaning it can be sold. So a lot of my clients sell their tax credits to banks, and they get cash back. The only problem with that is when you sell the tax credit, you generally have to count it as some form of earned income, so then you get taxed on selling it. But a lot of people, they don't care because they want the cash back from working on their project. On a project that I did a federal and state application, we sold our state tax credit, and then we used it to help pay down the construction loan that had converted to a mortgage. So you can decide what you want to do with it once you get it. The Arkansas Historic Tax Credit carries over for up to 5 years. So you can carry it forward up to 5 years. We're coming now to the end of a calendar year, and so like everything with the IRS, the tax credit certificate has to be approved by December 31st to be able to use it on the following year's filings. So I have a bunch of people trying to get, their projects done now and try to get their tax credit certificate so they'll be able to use it on their April filing. If you want to sell your tax credit, it doesn't really matter when you get it, but if you want to use it against your taxes, then it has to be done by the end of whatever calendar year. You can apply for both federal and state credits. And on the federal, it's got to be income producing. So you've either got to rent the building out, or maybe you've got a business and you put your business in the building, but somehow it has to be income producing. And can you transfer or sell your state tax credit once it is earned? Yes. However, as I said, the IRS does consider this as taxable income. So there's 3 initial requirements to do federal. The first one is the property has got to be listed or eligible for the National Register. Then the building has to be used for an income producing use. I get people that ask, that they want to have it income producing, but they want to live in part of it. And so what they make you do is do a calculation of the square footage that you would be living in, like kitchen, bathroom, your bedroom, and if these public areas are used for, your private in use. So sometimes it really, by the time you do all those calculations, it doesn't make sense to try to make that work. So we generally just tell people that, it's got to be an income producing use. And then here's the thing that really messes up a lot of people. So on federal only, the owner has to spend as much as the basis value of the property. So we have to figure out a basis number on property that we want to apply for federal tax credits. So typically what we do, here's a simple calculation, is say that your purchase price was $140,000 on this building, and that you get to take the value of the land away from the purchase price. And so on this calculation, we've said that the cost of the land that the building sits on, so maybe it sits on one lot and that is worth $40,000. And typically you get the value of that lot by looking at comps in the area. Just like you would do if you were looking at comps to buy a piece of property, you would look at what land is selling for. Then, so your calculation would be, you take 40,000 away from the 140, and you come up with 100,000. So that would be the minimum amount that you must spend. You must spend like $1 more than that to do a federal tax credit. Now, for example, I had someone call me the other day about a commercial building they own that they wanted to do some rehab, and they heard that they could do federal and state tax credits. And I said, oh, well, how, did you buy your building recently, or have you owned it and it's depreciated? Oh, we just bought it. How much did you spend? We spent $10 million. They literally told me they bought this building for I think it was like $10,500,000. And I said, well, unless the land it is sitting on, it was like a big warehouse property that is listed on the National Register, and it had been rehabbed with tax credits, federal tax credits, by the previous owner. But I said, unless like the land that it is sitting on is worth more than this building, I said, because they only wanted to spend $400,000 on their rehab. So you can see right there immediately, if you understand that you've got to be spending more on the property than you paid for it to do federal, that was not going to work. However, they could do state. If you just do state only, even on income producing, the state only asks that you spend a minimum of $25,000, and then they don't have any calculations that you have to figure out. You just have to spend a minimum of $25,000. So that would have been an example where we just do, a state tax credit instead of a federal. So the state tax credit is 25% of the total qualified rehabilitation expenses. And on commercial properties, income producing on the state, we cap out at 1.6 million. So you could spend 2 million on a project, but you only get to count 1.6 million of eligible expenses. $100,000 of qualified expenses on non-income producing. Again, this is back to private residents, and we changed the rule a session or so ago, and so private residents, you just have to spend a minimum of $5,000, and then you can spend up to $100,000. You can spend more than $100,000, but you're only going to get credit for $100,000. So that would be a $25,000 tax credit. I have a lot of clients that fit into this private residence category, so they may do $100,000 worth of work. I've got one that just did $50,000 worth of work. Just because the math is easier, I'm gonna go with a $100,000 project. But so they got a $25,000 tax credit, and then they wanted to sell their tax credit for whatever reason. And so I hooked them up with a bank that I work with in Missouri, Commerce Bank, and they got, like, they're paying 88 cents on the dollar. So those people got like $22,000 cash back from selling their tax credit. And then again, they will have to file it somehow on their taxes, probably as earned income. But a lot of people are doing that. So through the Arkansas Historic Preservation Program department numbers, earlier this year, so from 2009 to 2021, the total amount of tax credits issued for completed projects was almost $35 million. So that was 599 completed projects. So the total amount spent, those projects, the total cost was $353 million. So 25% of that is $34 million. So that's where we're getting some of our numbers, and we can see how much this state tax credit has grown since 2009. So these links are basically what's in those paper handouts. So if you want to make it easier on yourself, and you can go, when you go home, and you can put into your search bar, you can Google NPS, that stands for National Park Service, qualified rehab expenses. That'll bring up that first document. And then the preservation briefs is that second document. So now we're going to actually go through doing a tax credit application. So tax credits typically have 3 parts. They have a part 1, part 2, and a part 3. That's what they're called. So part 1 is what they're looking for is that the building is contributing within a district. There may be multiple buildings in an individual listing. I mean, like if it's a house, maybe it has a carriage house, or it could have other outbuildings. So that's the multiple buildings. And the preliminary determination of eligibility is, is it individually listed or is it listed within a district? And then if it's individually listed, you don't have to do a part 1. So you could actually skip that part and you just go on to part 2. So part 1 is necessary to find out if your building qualifies. If your building was contributing when the district was made, now time has gone on and maybe some work has been done to the building, or maybe nothing has been done to the building, and it's maybe gotten to this state. And so sometimes when we don't have all the parts, we don't have a roof, or we don't have the front wall, or we don't have several walls, the building may not be eligible anymore. So what you would do is you contact Arkansas Historic Preservation, and you can ask for the survey of the address that you're interested in your district, or if the building is individually listed. And they'll send you the survey form or the nomination, and this may tell you a little bit about your building. This is a typical first page of a historic survey. A lot of times I'll ask people if they have their historic survey and they're automatically thinking about that ground footprint survey that your county or city does. This is totally different. You can only get this through the historic preservation program. So this form is usually about 3 pages long and has exterior photos of what your building looked like when it was last surveyed by the Arkansas Historic Preservation Program. And so the Part 1 application is these 2 pages plus a map, and then plus a floor plan and plus photos of the interior and exterior of the building. Sort of like real estate photos, just what is the building like? So, and then you go into like Google Maps and you put in the address and you print out a map of the property, and you put all this together, and this is the Part 1 application. There's not a fee involved with doing a Part 1 or review fee. Part 1s are generally like maybe the easiest part of the application. So each application part requires a floor plan. And you want to number your photos and then key them to the floor plan. The floor plan does not have to be to scale or done by a professional unless you have a complicated project. So this is just a simple floor plan that I have drawn of a house. And so I've got the first floor on the left side, and then the second floor area on the right side.
Excuse me, this plan is what it is now, not what you're planning to do.
Exactly.
Okay.
Very good. So yes, this is the existing floor plan of what it is right now.
Okay.
So then you've got photos that you've taken of the property, and you generally want every side of the exterior. So I do this for a living. I've got a camera with a wide angle lens, so I can get that whole side of whatever. So I can turn in less photos with my projects. So you can use an iPhone. You don't have to be using a professional camera. You just are going to have to print out 4x6 color photos. And I use mailing labels on the back of the photo. You really can't see that, but that is a mailing label that's on the back, so you can write easier and it doesn't smudge or whatever on the photo. So mailing labels work well for numbering and describing the photos, and all photos should be labeled, numbered, and keyed for each part. So when I say keyed for each part, so you would have a set of Part 1, Part 2, Part 3 photos. So part photos show what the property is like, similar to real estate photos. Show the bathrooms, bedrooms, upstairs, if there is one. If it's a commercial building, you're gonna want to show what that commercial building is like. Like when you walk in, like if you were doing this room, what does that look like from that direction? What does it look like from this direction? That wall, this wall. This is so the reviewer can sit at their desk and look at the floor plan and, be like, oh, that wall at the back looks like this. Oh, there's a window, there's a wall that's in good condition. Oh, there's hardwood floor. This is what we got. Maybe in a commercial building, maybe it's got a tin ceiling. So all of these things would show up in these photos. So this is this one house project I profiled. So on photos 6 and 7, I've got the living room facing east, living room facing west. So if you can do those directional pieces, that helps to coordinate it with your floor plan. So, yeah, this building did not qualify. This is an interesting, sad ruin, but too much of it is gone to be restored. Generally, they have to have a roof and their perimeter walls. There are kind of exceptions, but just looking at this, and this may be the back of it that's still standing, so maybe the front facade is gone. And the front facade is like the most important part of the building. So here's just an example one, and you can see, you can look at this and see some of the historic elements, and then other things, there's been modifications obviously over the years. Like that nice garage door there on Main Street. And so this is a view looking toward the front of this building. and this is looking toward the rear, but this did qualify. You can see obviously it has more than that first example that I showed you. So this is why you want to do a part one. Obviously, these are like, really worst case scenario. Most times when people are doing a project, everything is still standing, whatnot. I've got some projects right now, like the building's missing its back wall. We're pretty certain it's gonna qualify. But if they're missing the front wall, that's like a recipe for disaster right there if trying to do a tax credit. So this building is back in use. You can see, the view from the street. If you remember the garage door, that's gone now. And a view of the new interior. So renovation work follows the Secretary of Interior standards for rehabilitation. And again, this is a rehabilitation program. It is not a restoration program. So if you're building, this is why the part one photos are so important, that you're going to show what you have. Things that have been removed by a previous owner, or things are so damaged, it's not on the wall anymore. Maybe the plaster has fallen off the wall and you have, a brick wall. So many people are enamored with this exposed brick walls. I think that is so cool. And if all your plaster is in the floor and the bricks are exposed because the building's been taking on water forever, you can ask to leave that brick wall exposed. But they will not let you expose a brick wall. If the plaster is still stuck to the wall, then they want you, to maintain it, repair it. If you need to take some of it down that's loose, but then repair it, because that is the historic context of the building. It always would have been finished with plaster. Some of my clients try to tell me, because they want their exposed brick so badly. The brick was the first thing. It didn't have plaster. We got it back to the original, brick. And I have to explain to them, that, like in a house, and even in most commercial buildings, unless they were a warehouse, that you're really going, to have a plaster or a sheetrock surface. And projects where people, they've done things where they shouldn't have. Let's say they turned in a photo of a brick wall. When we turned in our part one photos, it was fully plastered or fully covered, had been repaired with gypboard or sheetrock. They may tell you that you will not get your tax credit certificate until, the brick wall is put back to how it was, which would be covering it with, sheetrock or plaster. So it's things like that where it's an all or nothing program. So if you do something that is not approvable, you don't get your tax credit certificate until you correct the thing that you shouldn't have done. Sometimes people overlook things, like maybe they really didn't think about, or they got in the middle of their project and discovered they had a brick wall and they want to expose it. And I had a client do this where I went to take the final pictures and there is a brick wall exposed, and I'm just like, this is never going to pass. But we turned it in, and there were several other little issues with the project, and it was a federal project, and they said, can we just turn it in and see what she says? And I was like, sure. At that time, our reviewer was the person who basically wrote this book. So she was like the Bible holder of the preservation standards. But we turned it in, and if any of you are familiar with Harry Potter, she wrote to us what I would call a howler, and told them of all the things that they had agreed to in their project on certain dates, and referred back to those dates. And then she told them they had 30 days to let the department know how they planned to rectify these issues. They didn't have to repair it in 30 days, but they had to say what was going to happen in 30 days. And they spent, probably, I think that was about a $400,000 project, and they were really counting on getting 45% back in tax credits. So, they went to work and put it all the way it was supposed to be, and then got their tax credit certificate. So that's kind of, some examples. I told someone the other day that I should do a blooper reel of tax credit projects. But But that's the deal. It's like if you do something inappropriate or wrong, you know, and you didn't understand, and usually that's what it is. People just didn't understand that this was a no-no. They give you an opportunity, both at the state level and the federal level, to fix, you know, the issue. And then sometimes, you know, maybe the issue is not fixable. You know, maybe like if you painted your exterior brick that's never been painted before, that's something that's kind of that's a no-no. I mean, that would even with tax credits, that would be cost prohibitive to have someone come in and remove the paint to be able to get your tax credit.
I have a question.
Sure.
So, the picture you showed up there, the partially collapsed building, it became bank, I think it said Argos on it when it was first.
Yeah.
Well, I would probably suggest that most of the plaster from that was on the floor, right? So when they rehabbed, did they have to put plaster back on the wall?
It depends on what you want, what you ask for in your application. So like if your plaster's in the floor, you can, or the building has already been rehabbed by somebody else who didn't do a tax credit project, but here's this brick, you know, beautiful brick wall. If you want to keep that, typically you can, or you can ask, you know, if the plaster's in the floor, you know, the plaster's in the floor on this whole section, we would like to keep this. Because like if you have a section of it that maybe just one section's down, but this section is fine, they don't like it to look like arrested decay. So you can also get into issues where, you know, if you've got one circle, you know, that's out of it, that usually they will ask you to repair those instead of letting you leave it looking like arrested decay. The Coca-Cola Building, I was there a couple of weeks ago, and that building, part of it is a warehouse, and so it was always just brick, and it had been painted later on in a real industrial look with like white bands on the top, green bands on the bottom, and they asked to take the paint off the brick, and that was approved. And when I was there though a couple of weeks ago, I went and looked specifically for mortar dust, because that's one of the things, it's like people don't realize that as cool as exposed brick is, it's very dusty because the mortar is continually flaking out of there, and typically it's a 100-year-old mortar. A lot of times they don't need to be, you know, they don't look like they need to be repointed, and so people don't. But this wall, all along, like, I mean, this whole wall is brick, and all along the base of it, just very dusty. I've been in offices where people have done that, and, you know, they love the look, but they are not realizing how much dust that is going to create for whatever it is you're doing in that room. So, and there's not a list anywhere that says, you may not do this, you may not do that. And it's all based on the rehabilitation standards, and they're written sort of vaguely, because, you know, depending on the age of the building, like what's appropriate for now a historic 1960s building is not appropriate for a 1900 building. And so that the preservation standards, the rehabilitation standards are written to fit, you know, this whole umbrella of preservation.
So am I correct if I would say, okay, there's painted brick that probably never was painted over, there's plaster fall. So when you acquire the property and you haven't applied for any credits in, is that like the baseline?
Yes.
You don't have to go take off the paint that you didn't put on there, stuff like that.
Yeah, that's when I say it's not a preservation program, they don't make you, if the property is eligible,
Back to where it was.
right, you don't have to, but if you had like historic, you know, plans, like Grumpy Rabbit, I actually got to work on that project, you're gonna hear about that later. We had the historic Charles Thompson plans. And so if you have the plans of your building and you want to take it back, you can ask permission to do that, and, you know, here's our proof that this was this. But no, and generally what we say is, like, if your building's eligible like it is, you're always good to keep what you have, But the moment you wanna start messing with things is when all these rules start kicking in on that part.
Gotcha.
Just for example, like a building that maybe has someone changed out some windows to vinyl windows. Well, vinyl windows don't last forever, and you cannot repair them. You know, if your vinyl window drops dead, you've gotta go get a new window, one way or the other. Well, they're not going to allow you to replace a vinyl window with a vinyl window. So in situations like that, if a wood window had been what was there, was appropriate to the time period, you can ask to do a vinyl window and they'll tell you it's inappropriate.
Okay.
But you can ask to do a wood window, the appropriate style, and that would probably pass.
What if the ceilings have been dropped?
If the ceilings have been dropped, worked with a lot of buildings where they're typically still eligible because buildings in a district are only judged on the exterior when they're brought in as a historic district. But if the ceiling has been dropped, you are welcome to keep it if you want. But if you want, and sometimes you can ask, like if the tiles, like maybe the building's been taking on water and the acoustic tiles are soaked or, damaged, whatever. You can ask sometimes that you just want to get new tiles, that you want to keep the ceiling where it is. And they, a lot of times will approve that. But if you take it down and then you want to put it back, that is probably not going to pass muster. So, retain historic materials and features. So this is just depending on your building, the age of your building, what your building has. And sometimes things have been added that are not historic. And so most of the time we can all look at those things and, like, oh, this bookcase was added in the 1970s. I mean, there's just things that are apparent. Sometimes though, people have done work to make it look old, but it's not. And so those can be tricky sometimes. That happens rarely, but it does happen. There was a project that had an addition, this was like 20 years ago, that had an addition that was done, and the addition was too historic looking. And so the whole tax credit failed because the addition, they didn't wait for approvals and they built this addition, and you couldn't tell the difference from the old building and the new building. So retain historic character. Use compatible treatments and alterations. Applies to the exterior and interior features. Like if you're in a historic district, a controlled historic district, you may have controls on the exterior of your property, but they don't say anything about what you do on the interior. But this program it does matter, if you do everything correct on the outside, but then on the inside, you go off the chain and do some things. What you do on the interior can affect your tax credit if you getting it for what you did on the exterior. Although you can do projects where you're just focusing on one or the other. You don't have to do the whole, kit and caboodle at the same time. So, original windows, doors, woodwork, wood floors, whatever kind of floors you have, maybe it's a ceramic tile floor, are considered character-defining features and should be maintained. When I work with architects, they don't typically have like schooling in preservation at college, and so sometimes we'll have a beautiful historic storefront. I mean, it's obviously aged, needs repair work, but they want to come in and pull everything out and make it new, and that is generally not approvable because you want to be maintaining and retaining what you have if it can be reused. I mean, sometimes things are so far gone, things do need to be milled that look like they're supposed to look. But it's never a good idea just to come in and we're gonna make it all look new and it's gonna be wonderful. I mean, that's not what they really want to hear. They want to hear about each detail. They want to see it in photos. And if you're wanting to replace something, if you want to replace a wood window, even with a new wood window, they want you to show that this wood window is beyond repair. Because that's the wonderful thing about wood windows, is they're made to be repaired. So here's a list of do's and don'ts that are not in anything, but this is based on the standards. Don't remove windows and doors, especially historic windows and doors. Don't paint brick that has never been painted. Don't expose interior brick. Don't paint woodwork that has never been painted. And do match mortar color when repointing. Okay, so we made it through the part one. Our building is approved as a project. So now you can still screw up depending on your scope of work. So it's very important, that what you want to do fits these rehabilitation standards and it gets written up appropriately, because your building can be eligible. I mean, people will call me and they say, is my building eligible? It's like, yes, it's eligible, but then they tell me what they want to do, and it's like, yeah, that work is not eligible. That would not work for a tax credit, but your building's eligible. So again, it depends on what you want to do. So the part two is the scope of work. This is the signature page for the part two. All of these parts have a signature page. So on this page, we've got they ask for an estimated budget, a project start date, a completion date, number of housing units before rehab. If there's not housing units, that is 0. Number of housing units after rehab, square footage before, square footage after, and then the organization tax ID number or social security number that is going to claim the credit. So that's the part two. So you really do, you need to have an idea of when you think you're going to start your project and when you are planning to finish your project. These applications are for federal are for 24 months unless you do a phased project. So you have, on a typical project, you have 24 months to get it completed. And what they mean is that the IRS will only allow you to count 24 consecutive months of expenses. So, for example, I have a project in Pocahontas, a 1960s bank, that during the pandemic, but it started before the pandemic, but they just thought, oh, this will, we'll have this done in 24 months. And the owner was actually a contractor. Well, guess what? It went 30 months. So we had to go, and I have a slide rule on my Excel spreadsheet, but we put in all the expenses and then we moved that slide rule around looking for the 24 consecutive months where we've spent the most money. So basically what happened with him is he lost $20,000 worth of architectural fees that occurred at the beginning of his project, because that was the least amount for what he spent finishing up the project. Now on the state, they do not have the 24-month rule, so he could still count those 30 months worth of expenses on the state side. So he did get the 25% of that full cost, but on federal, we could only drop it back to the 24 months. So there's several, you can have as many of these pages as you want to do your descriptions of your work. So usually you keep copying this page again and again, putting in, and they're just like, these are blank usually, but it would be like number 1, 2, 3, 4, you might have 16, you might have 20. You don't have to fill up the whole page. But you go through each element of your building. So the first one up here is the roof, and on the left side of the page is the existing condition. The right side of the page will be the proposed work. So like on this one, generally, on the roof, it's like, the roof is old and dated at the end of its life. It's asphalt shingles. And then what we propose to do is assess the decking, tear off the roof, assess the decking, replace those materials as needed. If it's got a lot of damage, you may need to go into more detail about having to do roof framing, those sorts of things, then doing the decking, what size, what number felt paper, what kind of shingles. The Park Service is more particular about whether it's architectural shingles or regular shingles. They're not really too particular about color, but they're starting to, I've seen them get a little, ask a lot of questions on, if they're 3-tab or architectural or whatever. The next one here, we've got exterior woodwork, you know, if the exterior woodwork, if the paint is peeling or it's actually rotted. Yes, sir.
On the roof work.
Yeah.
What about metal?
If the roof is metal, or are you asking to put metal?
Right, asking to put,
It's gonna depend on the building.
okay.
So, like, if you've got a commercial building that has a parapet roof, you know, and typically, you know, if that hasn't been done recently, those are built up tar. But now more people are doing, you know, membrane or TPO. On those types of roofs, I don't know about metal. I know that we have not a lot, but we have people that have, you know, houses and that they wanna put like, you know, just a typical kind of a barn corrugated metal roof. And those typically would not be approved. And in some cases, putting a roof on like that might make the building ineligible, get it delisted. But there are metal roofs that are decorative, that are done to mimic tile. And again, you'd wanna ask first before you do the work and get it approved for whatever the application is. But anyway, exterior woodwork, you know, if that needs to be painted, if you need to have new pieces milled that match the existing, you know, everything that you're going to do, and then you would have a corresponding photo for these things. So you want to describe the before and after procedures, take color photos of the areas needing renovation, and then again, key the photos to the floor plans. So you'd want to have roof pictures, you know, make some close-ups of this peeling paint, rotted wood, whatever. You know, on those first pictures, part one, we had, you know, pictures of the whole side of the exterior. So on the part two, that's when you want to get in close and show some of these details better so they can see, the reviewer can see what you're talking about.
And we, okay, like we have some buildings that are in a historic district,
Mhm.
okay? We rehabbed two of them, we got two of them we need to rehab. But basically what we want to create is like a box where, because we don't know what the people renting it are gonna want.
Yeah,
Okay?
kind of a white box.
We wanna
Yeah.
create the, you know, restore it.
Yeah.
Put a box, put bathrooms in or whatever.
Right.
Okay? But so can we come back to the trough again? What I'm saying is, you know, is to do it to this point, but then this person comes and says, no, we need partitions here, or we need change rooms here, stuff like that. Are we eligible to come back again?
You could on the state. On federal, after you do one the first time, you have to count all the expenses that you've incurred to get a federal tax credit. They really kind of count against you in subsequent years. On federal, you'd have to spend, like if you spent $100,000 the first time around and you know, that qualified you to do the federal project, the next, if you wanted to come back because you wanted to make some changes, then you'd have to spend at least $100,000 and whatever else you put into the building on the next go around.
Oh, okay.
But you could just do state. You can do a state tax credit every 2 years on the same building. And I've had a few people, like they've done a big federal and state project, and then a few years down the road, it's time to do some maintenance or make a few changes here and there, and so then they've just done a state application, and it doesn't, that again, on state, you just, on an income producing, you just have to spend a minimum of $25,000. So, and sometimes that might hang you up a little bit, you know, because if you needed to do something for somebody that, you know, didn't quite meet that threshold of 25, but you also could have that state tax credit application open for as long as 5 years, so.
So you're just adding to the. Okay.
Yeah.
So the $25,000 minimum, let's not put you the tax credit, it's not over the credit's on over the 25, it's just that's the minimum you gotta go.
Well, you get, I mean, if you only spent 25, you'd get 25% of that back.
Okay.
So that's like a $750 tax credit, yeah.
So it's not a floor, it's just something you have to get up to.
Yeah.
Okay.
Yeah, I mean, to be able to do an application, you have to be planning to spend that much. And so, and if that's all you spend, then that's all you spend and you get 25%. Okay.
It could be, for example, if we had 4 buildings in a row, which we do, that could all be one project, right? So
You could ask for it to be one project.
Yeah.
So, and I've had that, we've had some small buildings where we've asked, you know, could these two and these two be one? You know, especially like if they were gonna be connected on the inside. So we get to the part 3, this is the completion of your work, this is when you're done with your project. So if you were doing a federal project, hopefully this is like right at that 24-month window, unless you did a phased project. You can do a phased project to get over if you think it's gonna take you longer than 24 months. You know, if you wanted to do a 3-year project or up to a 60-month project, a 5-year project. But on the part 3, so you're gonna have your after photos. And again, this is gonna be back to like your real estate photos. Then you're gonna label those, key them to the floor plans. You're going to have a tally sheet of receipts, and you're going to have receipts or proof of payment for materials and labor. And I get a lot of people that want to just give me copies of their invoices because their contractors do not give them receipts. And that typically does not work. The department wants proof that you've paid your contractors, paid for your materials. So you can either turn in a receipt, or what we do is we get like the copies of the check or the copies of how you paid your bills and attach that to the copy of the invoice so that we can say, you know, yes, indeed, you spent this money. In some cases, if you know, spent a lot and paid a contractor a large sum of money, you could get the contractor to send in something, you know, that says that you paid all your bills, you don't owe them any money. So that would be the part 3. And there's typically just this signature page, and then the floor plans and the photos and the tally sheets and receipts. So here's the Coca-Cola Building, so that's before, this is after. And here was the before on this commercial door. This is the after. The after photo, we did that door design from the Charles Thompson plans that were done, that we were located at this building. They did not have to do that. They could have left this door in place. They could have asked to do a more, you know, modern version of this aluminum door system, because it is a commercial type building, but they asked to do those original plan doors, and so that was approved. This is what the bottling room looked like the first time I saw it. This had been the Morrilton City of Morrilton judges chambers and jail and the whole 9 yards. And so this is what it looked like. The National Register nomination does not mention the bottling room. It does not mention anything about the interior of the building. It just mentions the exterior and the historical context. So anyway, once we pulled down the drop ceiling, we found the Coca-Cola medallions and friezes and plaster, and when we found these Charles Thompson plans that showed us what it was like. And fortunately, the owner wanted to put all that back. I mean, it was there, it just needed, you know, some tender loving care. But I went back to this building and took a new set of photos once they took all the drop ceilings and paneling out. The whole building had paneling and drop ceilings everywhere. And this was a historic photo of that bottling room. That tile floor we were not able to get back. The city of Morrilton poured so much concrete in this building. They even filled up the basement with concrete. So this actually has like a step over the whole surface. So that floor is still just concrete to this day that they polished up. So that's their, part of this room now is their conference room at the far end, and then that's the entrance of their lobby. You know, so this was a very cool project. This right here is what gave us some heartburn, is this terracotta block wall. So I always tell all of my clients, when I see something that is a character defining feature, do not do anything with this till we get permission. So this, the owner did not like this wall at all. He did not like this terracotta. This was the part of the building that was the Walmart, the original Walmart in Morrilton. And this was the wall surface. It was never covered in anything. It was just very primitive. That was the wall material. So he wanted to cover it with sheetrock. So we wrote the application asking to cover it with sheetrock. These are some of the photos that were sent in. And I told him, do not touch this wall. As pretty adamant with him, because he's a contractor, and contractors just not used to be waiting on approvals. Anyway, we get the notice back from the Park Service. If they don't have a problem with what you want to do, they do not say anything about it. If they have a problem, then you get what's called a condition. And so there was a condition sheet, and everything seemed okay. A lot of times they'll just put things in there to remind you of how to do them, you know, like on your air conditioning systems, you know, that they like the ductwork, if it's gonna be exposed, to be run down like one side and not snaking through the whole room. This was the last thing on the sheet, and it said it would be inappropriate to cover this block as a character defining feature. Well, I don't know that it's been covered, so the owner just starts, he got the same copy of the email, he starts sending me pictures of this wall covered up, and I'm just like, And we did ask, I actually called the reviewer, and it was kind of funny. I said, so I just got this, you know, sheet, and it says, you know, not to cover the terracotta block, and she said, he's covered it, hasn't he? And I said, yeah. And she said, well, she said, I'll take it to our special meeting and see if, you know, the other reviewers, they talk about these issues like this where someone's moved ahead with something and done something they shouldn't have, and see how they felt about it. Also, there was an area of this block where he was uncovering it. It had been covered with sheetrock or something in the garage area, and he was uncovering it. He said, don't I get bonus points? I'm uncovering it out there. I'm like, yeah, it doesn't really work that way. It's not done on a rubric. And anyway, they met about it a couple of weeks later. She's like, yeah, they want you to uncover it. And he said, well, we've shot nail guns into it. The brick is broken. I said, they don't care. They just want it uncovered. So they did. They uncovered it. We did get permission to put, at the bottom of the wall, you can see a white band, and that's where they hid all their conduit and phone line and whatever, because the bottom of this wall in the old photo, it had black paint on the bottom. So they did get that approved to do that, and he was happy with that. 2 years later, the owner and I are working on a different project. He said, you know that terracotta block? And I said, yeah. He said, I love that stuff now. and that is typically how that works out. Here's another part of the building. This is not a primary space like that bottling room. And they got to do some really cool stuff in these areas. So they got to make this a large opening into some offices, and they put in basically a glass wall and clean that all up. This is where the city of Morrilton poured concrete. They poured this on a staircase to create a ramp. I mean, so there was just all kinds of wacky stuff done in this building like that, where you just really couldn't get it back even if you wanted to. So anyway, that went to glass wall. This is a office area that got updated to this with the glass. And like here, there weren't any historic doors, anything particularly character defining about this area, so they got to have a little more leniency in this area. So here's just the breakout of this project. So the qualified rehab expense was $1.9 million. I'm missing a comma up there. And the Park Service review fee was $3,500 and some change, and that's based on that third sheet that's in your packet of how to do that. And the state review fee was $400. The federal tax credit earned was $381,000, and then the state tax credit they capped out because they went above 1.6 million, so they got a $400,000 state tax credit. And I think they sold that to a bank. And they, on those larger ones, like a $400,000 tax credit, the bank will pay like 90% from 88%. So that's just that, one, but we've got lots of, similar things. And this is just a house. This house was $176,000. And at that time, the review fees were $800. And the federal tax credit earned was $35,000. The state tax credit was $44,000. And at that time, I think the review fees were less, the state review fee was $330. Here's a solar panel installation. So this is a parapet roof, so those are easily able to be installed without being seen from the front, but I have had houses where they've installed solar panels on the back. And so those projects, like I did a solar panel on my carriage house, or solar panels, we have like 52 solar panels. We have the Victorian house, so those service our house. But we did the state tax credit because it's private residence, and we got 25% back on those solar panels. And then we got, at that time, 30% back on this solar credit, federal credit. So we got 55% back in tax credits on doing solar.
You were talking about roofing material earlier, so on that type of